It is Wednesday, the 10th of August, and currently the market is up 2.2% for the day, having a hard time, but still holding above this significant Fibonacci line, and it's still below this key moving average. The Federal Reserve did speak yesterday. Really, nothing within the silver market came into play. Other markets were maybe more volatile. However, we are now in the summer. Normally, this is when markets aren't so wild. Things should slow down a bit for the next few weeks, but normally it is after Labor Day when things really pick up. I want to go over some time and talk about this new structure that I put up. I've increased the amount of candles from 50 to that of 83. This way I can see more data, but at the same point not have too many where it's very difficult to see a candle by candle period and try to analyze it from that situation there. Now the reason why it's just that odd number is because it's very easy to have 100 periods in there, and I need the 17 beforehand so I can simply calculate the first period's 18 average. And the numbers on the right hand side has the price of the silver market, and this is always in US dollars unless I clarify otherwise. The current candle or the current week is up 0.44%. Last week it was down 3.84. Over the last 20 periods or 20 weeks, it's up a little over 9 or 3.19, sorry. In the 100, it's more than doubled. You have the highest period over 100 days, lowest period over 100 days, the Fibonacci point which is in here, the Fibonacci point in here is there. You have the 18 moving averages, they are front weighted as well as the upper and lower bands, and they were specifically created based on this 18 period moving average working within volatility. The distance from the 18 period average of highs to the upper band is the same distance as the 18 period average of lows to the lower band. Okay, that's that. Now, as far as this chart is concerned, we're still seeing that the resistance level is being found as support, which is in that of the 18 period average. Before, when it came down to this area, it would be finding resistance at the 18 here and then dipping below the lows. Now it's dipping above the highs and finding the support in there. Overall, a lot of it is still indecision. Where do we go from here? When you see these bands closing in, sort of like the Bollinger Bands do, never as aggressive though, it means markets are indecisive, but overall it's because of the lower volatility that the market does have. A break above this, I've said it before, things can really start to get going because when you're in this range, you're trading within the average. That means you're trying to find a decision. You're in a correctional phase, and that means you're breaking out of the correctional phase. Now, the same would be true for breaking down below support, but as of now, because it's finding support at this line, I'd be thinking more towards a move to the upside, but that's not always the way that it is. Moving on now to the 6 hour or quarter day chart. I've been talking a lot about the test of the 5 day moving average, and I was saying that it really needs to break below 37. And it came close yesterday, but it only went to about 37.02 or 37.03. So the test has really not yet been completed, but we can see in here we have a resistance test and really now two resistance tests with this declining 5 day moving average. However, since it's had the first resistance test, which is in here, the market has barely dipped below what its previous low was in here. And that still tells me that it still hasn't failed the 5 day moving average test to go towards the downside. Still trying to complete it. You're looking to have a big break above or below it, or find on a bullish case support at the level, then lift higher, and on a bearish case resistance at the level, and then move lower. Because we had the resistance here, but considering it only went down here, we don't have the then, but we have another resistance test going below here. Then we would be in that of a downtrend that could bring us down possibly to the lower band. And then from there on in, well, then what's the new message of the market happen to tell us? And this is if you're trying to, of course, time the market overall because of the simple fact that all the fundamentals that have been talked about for the last, what's it, August the 10th, so we'll say 3 to 4 years, are coming in very strong. The printing of excess money, the creation of money being backed by absolutely nothing, a debt based system that's really going to create massive debt. All that kind of stuff is constant right now. We're seeing the debt issues coming into play. It's a lot's happening, and I was stating in the summertime, not much is really going on. So most likely a lot of this will be a precursor. You'll see either minor moves, which would be moves up to 40, 46, and on the downside 33, 34, but getting ready for the moves that would occur after Labor Day. And what's concerning for the stock market is seeing how it's down 3,000 points or 2,000 points in the last couple of weeks. And this is supposed to be the possible calm before the storm. I find that to be a little concerning. Also, as well, we have the issue of the bank run. More people are finding out how currency is created, how we're in a debt-based system, and I think that's all you need to know is that the U.S. is losing their downgrade. We're having dollar crises problems. Gold is a safe haven. So, in order to get out of out of fiat cash and into real assets, a lot of the fiat cash is located within the banking system. And because of that, that means people have to go physically to the banks to go to the ATM, pull money out, go to the tellers. If this goes on a big case or a lot of people at once, that's going to cause ATMs to run out of fiat cash and the tellers as well. Other alternates are using your debit card or Interact card, as I know it as, which is using it like a credit card, but taking money out of your bank account itself and then getting the products that you need, as well as online payments through electronic payment on the internet. Okay, enough about that. It just seems as if that is becoming very relevant right now. I want to talk later about day trading and the exit strategy because that's getting to the point, but that's going to be later on. I have so much on the later on. I got more Fibonacci videos on the series, strategies and whatnot, but for now I don't have the time. I'm hoping things will slow down so I can have the time. As far as trend lines are concerned, this would be the downtrend line that it's currently in. And if we can break above it, obviously that would give us some nice little optimism. But the key thing will be the Fibonacci from this point towards this point or wherever the low happens to be. Because if it starts to rally, what you want to see is what's going to happen at both the 38.2 and the 61.8, which would be somewhere around here. And that's not probably too accurate, but somewhere in the areas of around here. So if it comes up here and then it starts to sell off and doesn't make the higher low and then come back to it, because then you'd be like, okay, now I want it, now I can come out. Boom, now it comes up, say it comes to this high. Same thing here, and then that's the type of patterns that you'd be looking for things to get through when you're going on a tick by tick basis. If you're looking to buy physical and you're playing on the long term trend, I don't yet have this set up for this many periods. On the longer term, I will soon, but I will put in a longer term one now with the old version. Okay, this is the weekly chart, and you have your dip. You have the pattern of the higher lows, you have the pattern of the higher highs, and I'm not a big fan for the most part of buying when markets are rallying really big unless I know something. And in here, I knew something, so that was one of the rare periods where we were on the unless factor. And that'll be again for another video. I got so many on the agenda, but I don't want to do too many. But you do have the correction now, and that's what I like to see. A little bit of a discount. I liked it here at 48, so am I going to like it here at 38, which is $10 cheaper? I still know how currency is created. I still see everything playing out. And quite frankly, I knew this information pretty much when this chart started, or at least back in here. And considering it's only up about 70% within that time, that's a surprise and a steal. Let's now go back to this trendline analysis. I've done this quite a few times before, but the big thing back here is when you can find support at the key level. that is totally super duper because you're on an uptrend line that's already difficult as it is to get by, but then to be able to basically increase the rate of ascent, that is obviously strong. If we connect the upper part of this band, I've done this before. I'm just can't remember offhand how close it was. Then we are in a situation where it's trading within this second higher band. But in a situation when you see something where you have a support line here and a resistance line here, this is telling you that the volatility can be jumping up quite big. And I stated recently that the volatility is just going to be soaring soon. And I was going to post last night on the blog that expect on the morning session today for things to get really wild, which is not the case because of this volatility chart in here. And the pattern that I'm seeing is this uptrend line in here starting to go higher, but we also got this downtrend line. Maybe this is the shortening or the lower volatility over the next 3 weeks, and there's a part of me that kind of hopes that it is, and there's a part of me that hopes that it isn't as well. So whatever happens, I guess will come into play. But if we look back in here, we had this sort of uptrend, and then it had this down move before the big one. A lot of times you don't know, but when you see how this breaks out like this, it's looking as if something may be added for extra moves. Now, as far as the chart is concerned, again, this will be yet another video, not today, but I want to point out now that this chart has what I call harmony, meaning you can make a story out of it. You can understand it, how it is working with the blue and the orange line, one of which is the 5-day average of this above. That's the blue line. The orange line is a 20-day average of the same thing above. And it's front weighted as well. But the harmony that I talk about has an area going back here, you break, you find support, you come close to support, you're trying to hold up, not quite, then you find resistance, resistance, resistance. Resistance here with a higher low, that's what you need to break a trend. You get above it, you try to find support. Nope, instead you get a failed move below, and it breaks above. And the reason why I talk about with harmony is I want to go with two key factors. One, I continue to expect this market over the next month or so, and really for beyond, to continue to show harmony within. But if I were to take random numbers of this volatility, and I will soon, and I already have, then the markets would no longer show harmony. So that would be yet again another later video. And if you have any suggestions, let me know, because if I have anything on the horizon that maybe people may not want to see too much, I just may throw it away. But I do want to do some more physical trading strategies. Again, if you have any questions or comments on that, please let me know. It would make it easier on my point of view as well. Alrighty, thank you for tuning in today. Enjoy the wild ride and take care. Bye bye. And a quick final update. Over the last few minutes, the markets are soaring fairly nicely as it is now up to 39.31 or up 4.3% for the day.